I don't think it's over. I think we're going to continue pulling back. And this 2% down day today, you think it's the end of the world, but really, we're still 3% away from all-time highs. Like, there's still room for this to pull back even more. I think a lot of people front ran this move first day of September. They want to take some chips off the table, and it was a repositioning. It wasn't like every name in the market was red. It wasn't the case. A lot of the defensive names were green. That indicates to me a lot of money came out of tech, getting repositioned towards defensive. As we get through the seasonality weakness period, I do anticipate somewhat of a bounce because it feels this is a no news type of red day. It was based on seasonality weakness, and I feel like we could see some consolidation. The VIX can start going back to 16, 17. That could be the case, but hopefully you guys participate in that trade. The whole point of a hedge is protecting your gains, and then you reallocate those cash towards your higher conviction names. We've been very adamant about this. Like, if you have a plan, you know what stocks you're going to buy, and entering is highly volatile period. If you know what you're going to do, these kind of days, you're level-headed, you're a technician, you're not going to be fear-driven on any of your moves because that's when you lose your money. This is a time where if you're a long-term investor, these next 6 weeks, this is your time to shine. This is your opportunity to get that alpha. And you can't be sleeping at the wheel and missing on these like insane moves because these dips have been getting bought. And when they have been getting bought, it's been extreme and very quick. So you need to have a plan. And as soon as like you feel sense the blood in the water, the SPY is at 535 or 540, like I'm pouncing and I know exactly what I'm adding.
This is like pretty standard stuff. I mean, again, we map out all the levels intentionally so okay, if we break below 555, odds are we're going to 550. Okay, cool. I can craft a trade around it. We even give you the damn options trade so that you can take advantage of this. Now, to Chai's point, macro market wise, if you're holding a very tech-centric, so if you're holding the Palantirs, the NVIDIAs, the Apples, like a tech-centric portfolio, you got to have hedge. Otherwise, you're just getting these huge, $20,000 drawdowns. Even if you're counseling 10 grand, do you want to see, a $1,000 drawdown? I don't think so. You don't want to see that drawdown. And so this is how you counter that move and protect yourself so that you can put a little money in your pocket when the market is selling off.
If we have another red day tomorrow, I do think it's going to get wonky. I think it's going to be pretty like wild how aggressive the moves will be. But I want to reiterate, like this dip that we're going to see will be a buying type of dip. It's nothing to be purely fundamentally wrong with the market. My thesis is we will hit new all-time highs by the end of this year. It's just going to be a bump, and any kind of severe dip will be a buying opportunity. And if you miss out, you're going to be missing on an insane end-of-year rally once we have a blow-off top in the market after the election. If you miss out on the hardware semiconductor names or the AI winners in this past quarter, a lot of those names who gapped up, they're probably going to refill that gap, and it's going to act like those A-plus earnings that they've experienced like didn't really happen. That's, in my opinion, those are the buying opportunities. No, like, don't try to catch those falling knives who are getting new lows, retesting new lows, or like specific industries that are just like have been struggling for years, and you're trying to do a turnaround. Like, don't put your chips on those kind of names. Have your chips on the names who've proven they are winners, and they're going to get scooped up because all the money that's on the sidelines, which is still a ton of money on the sidelines, trillions of dollars, they're going to go towards those kind of winning names rather than trying to find PayPal in the 60s to have a bounce play in 80. Then we'll see where they go from there because they're undervalued in an industry that's all these names are undervalued. Instead, it's going to go towards like the Palantir, which is the clear AI winner in the software space, NVIDIA, which is the clear AI winner in the hardware space. Be hyper specific on where you're going to buy in this dip opportunity, because I do think this is going to be a last dip opportunity for the rest of the year that we'll see like next year, but this is going to be the last dip opportunity of the year. So like be very specific on where you want to have your alpha in the markets for the next couple months. And also like it's really important like to be open-minded. Like this is like we've been saying a couple weeks now, like in this kind of macro environment, like you need to be able to wear multiple hats. I'm a long-term investor, growth investor, but like I'm not going to be stubborn or unrealistic on what the current setup is in the market. So I bought some options. This is the first time I looked at it because I have that long-term mentality. And I hope that a lot of you guys have that similar mentality where these kind of day like really red days doesn't affect you because you're thinking long-term. So today I didn't lose. I'm down $10,800 in my growth portfolio. My option for my SPY put was, wow, that is actually kind of nuts. $11,000. So I net positive $300 and I sold 25%. So like that just shows how important it is to hedge your portfolio when things feel frothy or you want to protect your yearly gains. Like today, minus 3.6% portfolio day, but I actually was green today because of these
Mhm.
hedges. Perfect example of why you need to have that open mind perspective on investing. Like wear multiple hats. Don't be know your lane. That's the only way you can do it. Like you have to be versatile and you have to learn a lot of the tools. There's a lot of ETFs out there or real strategies where you can capture income while it's going through volatile times to capture that increase in volatility and put in your pocket. So when things get normalized, you can reinvest that cash towards your high conviction names. Like you have to be open.